Hello everyone and welcome to Financial Accounting. Today we will talk about retained earnings and prepare a statement of retained earnings for a sample company. Retained earnings are the portion of a corporation's net income retained in the business. A corporation may keep all of its net income for expanding operations. It may pay a portion or all of its net income as dividends. The increases and decreases in retained earnings from business operations during the period are summarized in the statement of retained earnings. Revenues increase retained earnings, and dividends and expenses decrease retained earnings. Retained earnings is a part of stockholders or owner's equity. The retained earnings statement is a summary of changes in a corporation's retained earnings for a specific period of time, such as a month or a year. To arrive at the ending balance, we start with the beginning balance in the retained earnings, then add net income or deduct net loss, then deduct dividends. Net income is the excess of revenues over expenses. We have a net loss if expenses exceed revenues. We will discuss retained earnings and statement of retained earnings in greater detail in the video called The Accounting Cycle: Reporting Financial Results. I am posting the link here and in the description box of this video. Now let's prepare the statement of retained earnings. Financial information related to the Delta Corporation for the months ended July 31st, year 1, has been provided. We are required to prepare a retained earnings statement for the months ended July 31st, year 1. The heading of the retained earnings statement includes the name of the entity, the title of the statement, and the period of time. Remember that the retained earnings statement is a summary of changes in the retained earnings of a corporation for a specific period of time, such as a month or a year. In our example, the statement is prepared for the month of July. As of July 1st, year 1, the company had $550,000 in its retained earnings. Net income for the month is $205,000, and dividends of $54,000 were declared and paid during the year. Remember that revenues increase retained earnings, and expenses and dividends decrease retained earnings. In other words, net income increases retained earnings, and net loss and dividends decrease retained earnings. We start with the beginning balance in the retained earnings, which is $550,000. By deducting dividends of $54,000 from the net income of $205,000, the increase in retained earnings for the month is determined to be $151,000. By adding $550,000 and $151,000, we determine that the retained earnings balance at July 31st, year 1, is $701,000. Note that dividends are reported in the retained earnings statement rather than the income statement. This is because dividends are not an expense, but instead are a distribution of net income to stockholders. I hope you found this video helpful. If you did, please make sure to subscribe, hit that like button, and ring the notification bell so you are notified when we release more videos like this. Thank you all so much for watching, and I hope to see you all again in the next video.